Good evening, everyone. I think my couple of colleagues or the speakers have already spoken about many things about finance, right? So, first thing I noted when I just walked into this, I really can't stop saying this. I just went 20 years back when I used to come into college, and the way the college, last 20 years I've never been to a college, or neither have visited my own college to see how it is today. But it's fantastic to come back to a college environment and then never dreamt about it, stating that I would stand in front of some students and then probably I would teach them a subject or give my thought process about what I've learned in the last 20 years. So thanks for the opportunity from the management. So one quick question I really want to ask you guys, what is risk? I know this would be part of your curriculum. You would be reading it. So if someone wants to give a quick glimpse, not the academic answer, but in a generic way where everyone could understand, what is risk? Sorry? Ops loss? Perfect, perfect. So if I have to talk about in a layman terminology, I believe everyone rides a two-wheeler here. So do you wear a helmet or not? So you know for a fact the risk is that you are on the road, even though you are right, the other person may not be, right? So how do you manage that risk is wearing that helmet to safeguard your life and making sure that you reach back home in one piece, right? So that's a risk. And if you want to talk about anything that you do in a day-to-day, right, everything is associated with risk factor. And you are built or wired in a way that you learn to manage the risk and then make sure that you don't fall again and again, right, with the same way where you had committed a mistake. Uh, so risk management is a very vast topic if we have to talk about, right? So it has various techniques, it has various types, it comes across with various levels of risk. So I will touch upon some of the basics of it today, and I know for a fact that you would have also learned about some of the techniques here. So there are about 5 stages or steps of risk. If anyone wants to try and then see if, what are the steps involved in risk or risk management. Anyone wants to give a shot? Identifying risk is the number one. Yes. Okay. Okay. Again, risk management comes across in different platforms and different categories, right? So banking sector might call it a different word, but in the financial sector, you call it a different word altogether, but it's the same message that it carries on. So it is identifying the risk. So let's go back to the same example of your bike. You identified that there is a risk of you falling down while riding, right? You identified it. So you analyze the intensity of the impact that it might happen and then what would be the concurrence to it. So you prioritized over your life rather than your hairstyle. So you prioritized it and then wear a helmet. How do you treat the risk? So whether it is impacting your life or is it a compensation to it is something that you treated it. And you monitor it over the course of action to see it doesn't occur again. So that is something that it's very, very crucial, right? So there are about 5 techniques that is being used in risk management today in the financial sector. Okay, avoidance of risk is something that is the foremost that everyone talks about. Retention, so retaining not to commit the mistake. Spreading across what the consequence of the risk is about. Loss prevention and reduction. So what is the loss because of the risk that you are taking without having managing it? And the transfer, when we talk about transfer, it is, you're transferring the risk to a third party. The greatest example is your insurance. When you take a life insurance, you're transferring the risk of your life to a third party, saying that anything happens to your life in the future, there is a monetary benefit to either you or your family, right? So there are certain concepts in finance and risk, right, where they call it as 6 C's, 7 R's. So in risk management, we do have something called as a 7R, where we talk about recognition of the risk. So while doing anything, you recognize that could be a potential risk to you. And ranking of risk is nothing but prioritizing what takes the premost on the top priority to mitigate it. Responding of significant risk. So while you identify and then rank it together, right? So you try to respond to some of the significant risk, not to make sure that it goes beyond your limit. Resourcing controls is, so you resource to mitigate or control the risk factor. So that is your resourcing risk. Reaction planning, reporting is to the senior management or to the, when you work for an organization, the risk is something that you start reporting to the senior management so that they can come across with some of the actions that can be taken. And the last is reviewing of the risk management system, the system that you currently use. What is the control that can be brought upon is something that can be leveraged by discussion, group discussion or brainstorming sessions, or by leading it to the senior management. So there are some approaches that we as a bank, right? So as a financial institution, we actually talk about some of the approaches to mitigate the risk in the coming future. There are about 5 steps that we take. Define the risk appetite and controls, and enable risk culture and accountability. So when we talk about defining and enabling, there are about 3 lines of defense that we bring upon. The first line of defense is we, who are sitting here, who would be part of a financial institution, who would work, right? We become the first line of defense. So we could take multiple roles. We could be a risk owner, we could be a business service owner, control owner. Okay, we could take multiple roles, but our responsibility remains the same to mitigate the risk at the front end. So there is a second line of defense, which we call upon as chief risk officer or a risk stewards in the financial institution. What they do is they write the policies, they write the regulations for the organization. So those are the ones who actually give you guidance. And the third line of defense is your global internal audit, where they monitor the first and the second line of defense on how you are performing, and then they give you guidance, where you went wrong and what could be the mitigants that can be taken into consideration or taken as a solution to it. So the second one is the identify and assess. Identification, record risk, and assess the potential impact. So what do we mean by this? So we are identifying the current risk which the company is going through, and then we are assessing the impact we do an impact assessment of the risk and value it. So to run and grow a particular organization or a business, so we take the risk appetite. It is important to identify our risk and assess their potential impacts. So we are in an evolving environment where things change every day. So the risk also could change every day. So that is something that we need to be very vigilant of. Identification of risk is an ongoing process. So we understand it proactively and then start mitigating is something that could be or will be our responsibility while we work with a financial institution, right? The third thing is on manage. So risk management is an ongoing process involving both the first line and the second line of defense. So what are the things that we can manage is we can control the risk, we could give an assurance to the financial institution about what controls we are putting in place. we can bring upon the remediation actions, right? So what could be the remedy to the risk, or how could we partially or fully control it? And recovery and resolution planning is something that we talk about in entirety, right? And the fourth is on the aggregate and reporting. So this is, you analyze the data and then you enable decision making. This is again taken at the manager level, could be a partial thing on the first line and the second line, but majority of the decision making happens at the senior management level. So what normally goes through is, our friend actually spoke about the annual reporting, right? So some of the risk factors and the outcomes of it actually goes through to your balance sheet and the P&L. So that's where your company share value is being assessed, whether you are going in the right path in the trending towards success, or is declining. So where it needs an attention towards where it needs to be tightened up. So that is something that reporting actually helps to an organization. And the last one is on governing, outlining how we govern the risk management. A specific focus on escalation matrix is something that we will have to be very, very vigilant on. So risk governance structure or escalation matrix is something that we follow in every organization. Probably may not be restricting only for the banking industry, into the IT sector as well, where escalation actually leads to solution. So these are some of the topics that I wanted to brush upon, because I know your curriculum would have an in-depth knowledge about risk and its management, but on certain topics or techniques that is being currently used in the eternal market or eternal financial institution is what I wanted to touch base on and then give you some guidance to it. Any questions that I can take? Okay, risk also has a other phase to it. So we always talk about financial risk, right? There is something called as a non-financial risk as well. We call it as NFR. That's becoming big in the financial institution right now, because this is not something which is caused by money. This is not something which is caused by an external factor. It is caused by an internal source. So your people, your inadequate process, or it's a process failure, leads to data breach, system breach. So this is being controlled by something called as an NFR, non-financial risk. It's actually booming in the market. And again, while I was speaking to your dean, I was talking to him about, is there any curriculum change that happens? Because in the evolving market today, there are multiple aspects that is coming across, right? Today it might be NFR, tomorrow it might be something else. So we may not know. So how is your academic changing so that you are kept up to the market, and then making sure that you are equipped with all the aspects that is required for you to grow and succeed in your career? So that is something that even the education department will look up to it and then see what can be changed in the near future to equip yourself for the better future. With that, I would end. So this is a small snippet I just wanted to give you. If no questions, then thank you so much.